Time for business now with Kim Savage. Happy Friday, Kim.
Happy Friday, Lisa. The moment we all wait for, isn't it?
Yep. Honey healthcare exporter Comvita, it's been stung by new regulations as well as a poor harvest.
Yeah, so this is what the company's calling a perfect storm, really. So on the regulations front, it was a bit of a double hit for the company, really. So the market access into China, what happened was China changed some of its regulations around what it calls Daigou customers, which, what does that mean? These are customers who buy products, particularly in the sort of the luxury sphere. And when we're talking about Comvita here, we're talking about Manuka honey products in that kind of healthcare sort of area. People buying products and then sending it to China or bring it into China on behalf of that company. So some regulations targeting those customers then flowed all the way through to Comvita's sales and margins. Not only that, but at the same time, the Ministry of Primary Industries here in New Zealand brought in regulations, tighter restrictions around the use of Manuka honey as a label going on products. So that characterisation of Manuka honey, it, I suppose, lifted the standard that it expects from products that have that label. So what the company says is that historically honey which has been of what they call a lower potency has actually qualified as Manuka honey, which is of course the sought after label that everyone wants overseas. But with those regulation changes, then it's meant that quite an amount of its honey is unable to be classified as Manuka honey, and then as a result, unable to be sold into some of these markets or I guess sold at a lower margin for them. So added to that, Comvita's apiary, which it owns here in New Zealand, KiwiBee, had a poor season as well. So we're talking about poor weather for cultivating the honey. So all of that, and then that combined with some asset write-downs, a significant chunk of asset write-downs, about $20 million worth, resulting in a net loss for the year of $27.7 million. And the company not overly happy with that, fairly disappointed. Last year, the company reported a net profit of $8.2 million. So a significant, I guess, downwards, that result coming really down for the company this year. So a strategic review is underway, as you'd imagine, after seeing some of the, or experiencing some of the things they've experienced externally and then finding issues with their apiary and things here. The review happening now and looking at both the supply side, so what they can do in terms of improving the supply side for their Manuka honey, but also looking at the demand side. And the company does have some positive thoughts about what it's doing in China at the moment. It does have what they call in-market distributions, where they can actually have a distribution company there in China, which is doing all the work there for them, and they can sort of access extra markets by doing it that way. So feeling more positive about the year to come than the year they've just had, most certainly.
So, and it seems like consumers have got a little touch of the winter blues.
Yes, it does. Retail spending, barely any growth at all in the second quarter, we found. So if we look at the official numbers, which have, of course, have been seasonally adjusted, 0.2% in the 3 months through to June, that's spending growth. So that's less than a third of the growth we saw in the first quarter. The weakest growth in more than a year. It seems we are not getting our wallets out this winter at this stage. So consumers, what we are spending money on, electronics, pharmacy items, such as cosmetics and liquor. Apparently, we're spending more on liquor as well. Department store spending, though, furniture, supermarket spending, and food and fuel were all lower for that second quarter. So why are we seeing this? And economists believe it's this thing we call the wealth effect, and that house prices, in fact, are to blame for this. We have seen a softening in the housing market, and what tends to happen in that case is that consumers or households spend less. So their feeling about the housing market, if it is not rising at the rate perhaps it has been, if that growth is a little bit softer, they just tend to just pull in the reins a little bit. Perhaps they're not going to go and buy that new lounge suite or the new dining table or the new cushions, I suppose, even. And so it just sort of curtails that spending a little bit. Also, of course, the other thing there is that as house prices don't quite grow at the same rate, of course, people's access or people perhaps not accessing the equity in their house quite the same way, or they can't quite borrow as much as they maybe would, obviously, if those prices are rising at a more rapid rate. And so these are just some of the things we're seeing in the sort of spending or retail spending area at the moment. And of course, that's only second quarter numbers, and we'll have to see what happens in the third quarter next, and that may tell us a bit more about what's going on with consumers.
Let's do a quick whip around the markets.
So if we take a look at the NZX 50 index, down close to 1%, 102 points lower, 10,622. And if we look at Comvita, the company I was talking about, the honey producer there, up about 13 cents, about 5% higher, $2.75. The New Zealand dollar at 63.8 US cents, 94.5 Australian. And just something to watch out for this weekend if you're a market watcher, someone who keeps an eye on the markets. Jackson Hole, Wyoming, which to a lot of people won't mean an awful lot, but to those who do keep an eye on the markets, it is going to be an interesting weekend. That is where an array of central bank governors and policymakers are meeting this weekend, and we are expecting to hear a speech from the Fed Reserve Chairman, Jay Powell, probably overnight tonight. I believe that's taking place. And so, of course, US markets will be open overnight tonight. They'll be looking for a bit of direction on what the Fed Reserve is thinking with regard to interest rate cuts, further cuts. And so we'll just be watching markets to see what happens there. And of course, whatever happens potentially could flow through to our own market next week. And we'll certainly keep you updated on all of those.
Thanks, Kim. Have a fantastic weekend. That's Kim Savage with our business wrap this evening.